Let's talk homeowners insurance. If you live in Texas, you already know the importance of having it because of our tornadoes in upper Texas, South Texas. We have hurricanes, hailstorms throughout, and we do have flooding. First, I want to tell you what is a homeowner's policy so that you can understand it. But if you own a home, you should have homeowners insurance. Even if you don't have a mortgage and you're not required to have it, you should still have it. Probably should also have flood unless you absolutely know that your area doesn't flood. Homeowners insurance protects you financially from any kind of damage that happens. That's covered. Okay, so that's kind of a big deal. That the coverage includes things like fire, theft, natural disasters. Flood, again, would be a separate policy, a flood policy. And your homeowner's insurance covers wind and hail unless you live within 50 miles of the coast, and then you would have Texas windstorm insurance. You could have another one, but if you cannot find any kind of wind coverage and it's a separate policy, the state of Texas has a quasi-government agency called Texas Windstorm Insurance Association. We call it TWIA, T-W-I-A, and there's some things that you have to do. You have to have it inspected. It has to be inspected. You have to get a written request ahead of time, and it has to be inspected afterwards and blessed by an engineer that's TWIA certified. Anyway, the most important thing to consider when you're purchasing homeowners insurance is your level of coverage. Like, what do you need? And that could be based on, I did a segment on the value of your home, the cost of rebuilding it, what's its age, does it have code items, like an older home might not be up to code on all plumbing or, GFI plugs for electric. So those are things to think about, because if you get an actual cash value policy, code's not covered. So if you have an older home, you probably want to make sure you get a replacement cost values. That's called an RCV type of policy. Another important, and this is really important, consideration is the deductible. So in Texas, a long time ago, it would be maybe $500, $1,000. I mean, it would be a set number. Then after Ike, after Katrina happened in Louisiana, then after Ike happened here in 2008, and then we had Harvey, but really after Ike, it started changing. Insurance companies began doing a percentage. The percentage is based on your coverage A. Coverage A is dwelling. So if my house is insured for $400,000 and my deductible is 1%, that's $4,000. If it's 2%, it's $8,000. If it's 3%, it's $12,000. So you understand the deductible could end up making you self-insured on, say, a small water claim, or say a small house with a roof, the way the roof is, getting depreciated. Maybe have an actual cash value or a roof payment schedule, which Allstate sells, and some other ones sell it now too, where you may have replacement on everything but the roof, and that could be an actual cash value. And you have a really high deductible, say $8,000, and once they depreciate your, $15,000 roof down, it's under deductible. They didn't have to pay a penny, but you have to replace it. And if you don't, you're pretty much paying for coverage you're never going to get, because they're going to remember that. They're not going to replace it. That damage is going to be older. And you may hurt yourself in getting coverage for the interior because you didn't do your due diligence, replace the roof, or patch it, or whatever insurance states that should have happened. And then also the limits are important. And the limits are important because you have to think like health insurance. So worst case scenario would be your house burned literally to the ground, or significant enough to where you had to tear it down, or a tornado, or something, or just a major water loss, like your whole roof came off and just soaked your whole house and you pretty much have to rebuild it. Today's prices, it's kind of expensive to build it, and it's not just labor, it's material, or it's not just material, it's labor. And then you're having to put it back potentially up to code, and maybe your neighborhood has its own standards, or your house has been grouped into a new township or something. So you have to really think about that. The dwelling coverage is, like I said, coverage A. And coverage B, which is other structures, is generally 10% of that automatically. So if your house is insured for $400,000, your other structures is $40,000. That means your garage, if it's detached, like not attached to your house in any way, decks, gates, fences. I've seen people with like metal fences all the way around their house and with an electronic gate, and maybe a little shop behind their house that's not connected to their house. $40,000 might not cover that. I mean, you have to think about it. Also, personal property, really think about what every little thing in your house is worth. We're talking pictures on the walls, lamps, everything. Just here in my office, I have a desk pad, and I have lamps, I have, things like that. That would be under my homeowner's policy because it is personal property. It's not part of my business. And liability, that's something, if you feel like somebody may come over and injure themselves at your house, that's liability coverage. And most importantly is probably loss of use coverage, which is when you have to get out of your house or you need additional living expenses. Say, for instance, your house isn't totally knocked down, but there's enough damage in it that it has to be repaired. You have to keep electricity on at that house. You have to keep water, so the workers have a bathroom or to wash off their paintbrushes or whatever. And then you end up having to be out of your house long enough to where you go get a house to rent. You now have to pay the deposits there. You have to pay the electricity and the water and the rent. Insurance, that's what insurance covers. And so you have to think about, that's not a really good amount. If it's $50,000 or something along those lines, you need to really be thinking about, if I had to be out of my house for 6 months, a year, like say on a fire, would that cover everything? And I'm a family of 4, I'm a family of 6, I may have to board my dogs, I may have a piece of property, maybe I could rent an RV, and that would all be fine and we could figure it out, but maybe not. You have to think about your own particular circumstance. So those are things to think about. And so really, this is when you do it. You don't want to do it now that it's fixing to be, about to be hurricane season in a couple of weeks. That's not really a good time, but, better late than never. I'd rather see you talk to your agent now and try to get all that lined up in anticipation, because once that claim happens, whatever your policy says at that point, that is what it is. And a lot of people don't realize all these things I'm telling you until it's too late. When they get educated is when they file that claim and they're being told, sorry, not enough money. Sorry, that's not covered. Sorry, we can't do that. And they're very upset and stressed out, but it is what it is. I can't make something else unless you were sold something and insurance, did something nefarious, but that would be really rare. But sometimes I've seen agents, lower a policy in the middle of the policy period, which is a year. I've seen them take away coverage. It happened to my mother-in-law, and it does happen. It would be very rare. It's a no-no. Insurance company probably would fix that if your agent did it. They have errors and omissions. There's things that you can do, but always you have the ability to hire a public adjuster. Make sure they're licensed. You can call Texas Department of Insurance and check our licenses. But in the meantime, stay safe and be prepared.